This is Pranav Rao from Smartkarma, and I'm delighted to have with me today Himanshu Dugar to discuss his not-so-positive views on the travel food services IPO in India. Himanshu, thanks for your time today on the 8th of July. To begin, could you briefly introduce TFS and its initial public offer?
Yeah, hi Pranav, thanks. Happy to discuss TFS. So broadly, what travel food services does is it operates quick service restaurants and the lounges in the airport. So in particularly in India, it is a slightly unique thing because almost 400 plus million footfalls are witnessed in the airports that we operate that are presently active, and plus there are more airports coming up in India, expected to add another 100 airports. So we are already at 100 plus, and another 100 are expected to be added in the next 7-8 years. Now, why is TFS unique here? Is because TFS has a presence in the top 14 airports in India, covering all the key, metro and the tier 1 cities. If I look in terms of footfalls captured, so almost 400 plus million, like I mentioned, the number of footfalls, 300 plus million visit the top 14 airports, which are catered to by TFS as well. Now, the other part why this travel QSR becomes very interesting in the context of an airport in India is because of the way the Indian travel is, the air travel is scheduled. So what happens is, normally the check-in time for your boarding, that is the check-in time at the airport, closes 1 hour before the actual departure time, and this creates a lag. Plus the way the infrastructure is currently in India, on an average, any consumer who tries to fly spends at least 2 to 3 hours outside away from home. So this creates a dining demand, specifically at the airport, because given the restrictions of traveling in and out which are present in India. So broadly, and the other aspect also is that almost 90% of India's airline operators are low-cost carriers. Now, what this does is it limits the on-board food options. Now, given the vast airline airport land space available, this creates an opportunity for all these QSRs to have a presence and serve the customers better. Now that's briefly on what QSR and lounge operations that TFS does. Now specifically on the peers, right? So there are no listed peers as such for this company, other than say the parent company, which is SSP Group. Coming specifically to the Indian context, almost 4 or 5 lounge operators and small QSR chains are operating in the Indian airport context. But given the kind of scale, so for example, TFS accounts for 26% of the non-lounge airport QSR, and in the lounge space, TFS constitutes 45% of the revenues. So that kind of dominant presence is what TFS enjoys in the Indian airline market. Just quickly on the valuations. So what the other part that becomes unique for TFS is that they are having exceptionally high ROEs as well as operating margins for the business. Largely, I think it's dependent because of the concession agreements and the kind of footfalls that in a concentrated area which TFS enjoys. So in parlance, the Indian QSR, say Jubilant operating Domino's or Devyani and Sapphire operating Pizza Hut and KFC, on a usual they operate around say 500 to 2,000 stores, and they are generating revenues of say around 5,000 crores, 3,000 to 5,000 crores. Whereas TFS with hardly 400 outlets is already delivering almost 2,000 crores in operating revenues. Even on the ROE perspective, I think it is a unique position where the reported ROEs for TFS are upwards of 30-35%, whereas the listed players currently are operating somewhere between 15 to 22%. Lastly, on when I thought about the valuations and how they look for, I tried to compare TFS valuations in India with say the parent company, which is SSP Group, or the global food services players like Compass and Cisco, which kind of have a similar ROC ROE metrics, but even they are kind of trading at around 20 to 30 times earnings, whereas TFS currently is positioning for a much premium valuation.
Understood. Thanks for that, Himanshu. A lot of that kind of commentary was leaning positive, but in your note, I think you mentioned there's an inherent risk in the business model. In your opinion, could you talk about that risk?
Yeah. So the primary inherent risk is the dependence on the airport operators. What happens is, given this is a niche travel QSR, so the concession agreements that the TFS signs with all these airport operators have a lot of limiting conditions. Previously, say 10-15 years ago, the typical concession agreement would be for a 20-25 year period, giving them considerable freedom on how they wanted to operate. But now the airport operators have started to take a much active interest in the running of this QSR business or the lounge business. If you look at the companies reporting as well, the business model, they have a largely JV driven model today, wherein most of their own assets as well have been transferred to JVs, which are owned primarily by the airport operator, with TFS having a nominal 20 to 30% kind of stake. So that kind of limits the upside that the company can enjoy. in the ahead years. The second aspect is some of the operators, the airport operators, have already launched on their own a convenient economy food service platform. So want to mention specifically the name of Udan Yatri Cafe, which is available in 3 airports right now in India already, which offers at very, very significantly low cost, food and beverage options to the consumers. The third part of this, airport dominance is that the case of Adani Airport Holdings, which today operates almost 8 airports in India, and in terms of footfalls, say a year or two ahead will be holding almost 30 to 40% of the overall footfalls in the airports. Now, what they have done in the last, specifically in FY25, is the entire launch operations as well as the QSR operations that were present in the books of TFS have been moved to the joint venture with Adani. So, from owning 100% of the business from say 1st October or 15th October 2025, the travel TFS will only get 25% of the share of the business that these the airports generate. This I feel will make FY26 specifically, that is the coming year, the ongoing year, to be a kind of a damp year, because the growth which will come from the like or SSG sales will be offset by this transaction. The second part, which is another major revenue generator for the airport QSRs, is the lounge business. So in the lounge business in India, many of the credit card companies offer loyalty programs where they give access to lounge for a minimal fee, almost zero. This is very different from the priority pass model, which is more prevalent in the other overseas markets. So in context, let me give you some numbers here. So in FY19, that is for year ending March 2019, completely pre-COVID, the lounge operators in India generated revenues of just 700 crores. Today, that is for March 2025, FY25, the footfalls are largely flat year over the last 6 years. However, the footfalls in the launch access has increased threefold, and the revenues that's been generated by these launch operators are upward of 2,500 crores. Now, this kind of has become a damn squib for the credit card operators, because they are starting to see much higher costs. So what we have seen in the last, say, 6 to 9 months is many of these credit card operators cutting down on their loyalty programs. Some have completely removed the lounge access as a loyalty feature, while some have put massive restrictions, say one per quarter, or spend-based programs, etc. Now, the impact of this will most likely be felt, I think, in the coming 1 or 2 years, because maybe the launch business specifically may face kind of flattish or negative LFL growth.
Understood. Thanks for that, Himanshu. I think last question is just around the international opportunity for TFS. The business has ventured overseas. Can you talk a little bit more about their operations in non-India markets?
Sure. So, see, the primary driver for TFS, overseas expansion has been its acquisition by SSP Group back in 2016. So SSP is SSPG London, listed in the UK, is the world's largest travel QSR player with almost 3,000 F&B outlets in 600 locations over 38 countries across the globe. Now, SSP, having witnessed the way TFS operates, in fact, the kind of ROCs, etc., which are being generated by TFS have been much superior to SSP as well. So what we have noticed is that SSP kind of maybe have pushed TFS to embark on an international expansion spree. There were 3 lounges that were opened in Malaysia by TFS in joint venture with the SSP Group, wherein SSP had a very minority stake. And even recently, early this year, TFS opened a new lounge in Hong Kong in partnership with SSP as well as Priority Pass. So what we get to know from the management in their conversation about the business is that they are looking at this as an increasingly high quality growth opportunity, where they feel they have a long runway to expand to more lounges across the Asian continent. Another aspect of this growth is their premium lounge luxury lounge offering called Araya, wherein right now it is operating in just one, I think, Malaysia, the Kuala Lumpur airport. It's operational. The plan with SSPG is that to expand this to all the 38 countries where SSPG is already present, as well as into newer markets. So they have done a memorandum of understanding between TFS and SSPG, where all the prime airports in Asia will be catered to by in the Araya launch by TFS, and outside Asia, whether it is the Australia-Asia markets or the European markets, SSPG will be investing in creating the lounges, but TFS will be operating those lounges, and TFS will be have access to the royalty portion from those lounges. So that's broadly about the growth plans.
Understood. Well, thanks for all of that context on TFS, Himanshu, as well as the call today. Listeners, you can check out Himanshu's coverage of TFS's listing on Smartkarma, and please tune into our next Smart Call. Thank you.